True Serum for your investment and insurance questions. I'm Josh Knoll, the owner of Gulf Coast Financial Advisors, and I'm joined by my co-host, Mr. Jay Stubbs, Regional Director for First Protective. We are brought to you on the Prime Capital Investment Advisors Podcast Network. Well, Jay, we're recording this one just a little bit different than our past episodes. So have we done one on a webinar like this before?
There's a first for everything, my friend. There's a first time for everything.
There's first time for everything. Jay and I, along with our producer, Johnny Gwynn, got together last week, and we decided that it would be appropriate and good timing to have a leadership in a time of crisis series. And what we're going to do is we're going to welcome on the leadership and executives of the independent RIA that I affiliate with called Prime Capital Investment Advisors. We're going to be talking to the executive level management there to get a behind-the-scenes look at some of the decisions that's been facing them, some of the unique situations they've had to deal with as we've navigated not only a stock market experiencing historical levels of volatility, but we've also obviously been navigating COVID-19, a global viral pandemic. So with all that said, our guest today on this one is going to be Chris Bouffard. He is the Managing Director of Wealth Management for Prime Capital Investment Advisors. Some of y'all may recognize Chris from some of the previous marketing stuff that we've done. But we're going to dive into what Chris's role is at the company, some of the things that he's faced, and how that compares to some of the things he's dealt with in his long career. Before we dive into all that, though, we're going to have our friends from Sloth Racer kick us. Chris, Jay, how y'all doing?
Doing great.
Hey, we're doing pretty good. Different times call for different measures, and I'm just glad to be able to be a part of our podcast series. Josh, good to be with you, and certainly to have Chris in joining us today.
Well, we've had Chris in before. We actually had him in studio, what seems like a completely different era. And you and I both, when we were done with that particular series, we both remarked to each other, man, this guy knows his stuff. So, Chris, thank you very much for coming on again. And here's how we're doing this leadership in a time of crisis series. You and some of the upper level executives and leadership at Prime not only have a unique outlook on seeing how this crisis is affecting your individual business, but you also have some experience to play on. So what I'd like to start with first, Chris, is can you all tell the listener what is your role at Prime Capital and what all does that entail?
Sure. So official title is Managing Director of Wealth Management. And we have three different primary business lines under the Prime Capital Investment Advisor umbrella. We have Prime Capital Wealth Management. That's my business group. We have our Qualified Plan Advisors, QPA. And then we also have Financial Fitness for Life. And qualified plan advisors, those are advisors working for 401k and qualified retirement plans, and also do participant education. And then we have an participant education outsourced program through Financial Fitness for Life, encompassing both education and all around financial wellness for participants in plans and advisors not under the PCIA umbrella. But under the wealth management, business line, we're dealing directly with individual investors, retail investors, not with the plan sponsors or qualified plans, but directly with direct investors in traditional wealth management services, financial planning, investment management, and so forth.
Very good. Well, with all that, Chris, you have a fairly, how many years have you been in this industry?
You can count the rings on my head, I think, 25 years.
25 years. So Jay, I'm going to kick it to Jay here in a minute, but my first question to you is, have you ever, is this truly unprecedented? Have you ever seen anything like what we're dealing with right now? Chris, that was to you. I'm sorry.
It is a bit unprecedented. Certainly, the most similar event we've had was the great, financial crisis, 2007, late 2007 through 2009 event, where we had tremendous market dislocations, a lot of policy response, both from the central bank, Federal Reserve, and from legislation in Washington, D.C. And we're basically back in that kind of a regime right now. But the crisis certainly is different. But the old axiom in the investment business in Wall Street is, history doesn't repeat itself, but it often rhymes. And so that's the most similar parallel, both in terms of market dynamics and economic shock. But this one's a bit more unprecedented in its global nature, that it's a viral pandemic, not a credit event or a financial instrument type of caused event. So there's certainly a lot in terms of watching the markets in the economy and everything we need to do to work with clients and business partners through that, through this event like we did in 2008. But just by the nature of our get together today, it's very different that we're doing everything virtual. We've got this essential shutdown of economies and, social distancing and stay at home. That's a very different, paradigm than 2008.
So one of the things that I kind of have been monitoring, I guess now we're going on right about a month into the pandemic, the stay at home, the quarantine. We've seen our markets extremely volatile, Chris. We saw significant drops in the first couple of weeks, and now we're in a situation where we're starting to see a little bit more stability in the market. And I think that comes with a lot of guidance from our federal government, from different state governments, a response to the stimulus that is coming in for from the Federal Reserve, and certainly the stimulus package coming from our elected officials. The trading volatility seems to have I hadn't watched the VIX this week, but it seems like it's a little subsided. Can you comment a little bit on volatility? The fact that, and as I'm talking to you, we got a Dow at 23,975. I think that may be out of bear territory, if I'm not mistaken there. We were in a bear market, and things have just kind of climbed back up a little bit. So speak to volatility, if you will.
Sure. Good observations. It was extremely volatile. In fact, March was the most volatile month we've ever had. We covered that on our last podcast with Josh, and not only the most volatile, it was, as you mentioned, the quickest bear too. So there were a lot of adjectives and superlatives to go around for this event, and the one that just kept coming up was unprecedented because it was the fastest bear market. It was the most volatile month we've ever had. It was the quickest and largest policy response, both from monetary policy and from fiscal policy. So all that happened, and because it did happen so fast, both the initial reaction in March and going in just 23 days, not only into bear market territory, but all the way down to the March 23rd lows of minus 33% on the headline S&P 500, spiking all the way up past 80 on the VIX. That's a volatility index that you mentioned. That's an all-time high on volatility index. The average volatility for the month was all-time high. And we saw that just a tremendous, sharp and large drop. But then we got an amazing comeback because of some of the quick and massive policy response, because it came so much more quickly and really all at once. There were several stages, but they came within days and weeks of each other, not the months that it took to get some of the policy and the various QE and TARP programs in the financial crisis. These were coming quick, and they were rather well coordinated between monetary policy and fiscal policy. So that's something you don't often see to this degree, is the interaction between both the legislators and the monetary policy makers, but because they did act so quickly and decisively, and with some unique programs, that they were able to stabilize the financial markets and, more importantly, the credit markets. That we did stabilize, reestablish some confidence. VIX the volatility index is suddenly back in the 40s, below 50, way off those highs of March. So, knock on wood, fingers crossed that, that we've got the worst of it out of the way. There's a lot of debate now on what letter do we use to describe the recovery process. Is it a U, a W, an L? But certainly we're maybe a V. We're kind of on the V pattern now. There's probably, some more turbulence coming with the earnings season just kicking off this week and today. But there's going to be some other hiccups, but we should feel good that we got a reasonably coordinated and effective stabilization from policymakers, both on the legislative and monetary side.
Yeah, you mentioned the credit. The banks are coming out. I think they're jumping in the earnings pool the first this week. So we'll see a lot of the major financial institutions that we're all very familiar with. The big conglomerates, if you will, Wells Fargo and JP Morgan and the like. So we're going to look to listen to them. But you already said they've gotten to wrap their hands around this whole lending thing and the stimulus package and the small business loan initiatives. Seems as though there's a little bit more stability. Earnings aren't going to be what we thought they are not going to be stellar, but seems as though there's a little bit more stability. Josh?
Yeah, Chris, I want to take this down to the company level because I felt like, and I want you to extrapolate on this, but I felt like not that Prime Capital prepared for the virus, no one did, but I do feel like there were some things that started going into play towards the end of last year and the beginning of this year. Anticipation of possibly a market slowdown, market correction, whatever it may be, that I think that looking back now seemed prudent at the time. Now in the rearview mirror, it seems like, hey, nice work. Can you walk through some of the action steps that you all started doing towards the end of last year, and then segue into how things have accelerated with the decisions you've had to make behind the scenes in your role at Prime once the crisis really took hold?
Sure. So going back to my role over the wealth management business, that incorporates investment management as well as financial planning and just overall business operations and support of all of our advisors like yourself and our business partners. But you mentioned in your question there up front, at the end of the year in December on the investment management side, our investment committee and our CIO, Chris Osmond, and his team and myself, we all working together. And this is primarily under the risk management banner, if you will, or label, that we had a tremendous run in 2019 in most asset classes. Every asset class was up pretty healthy, especially equities. Because of that, the exposures in our model were overweight those asset classes that did really well. So we did the prudent thing and trimmed back on some of those, doing a full rebalance, whereby we were selling the appreciated asset classes, buying some of the less appreciated asset classes, and reestablishing our target exposures for asset allocation for the large majority of our clients and accounts. We did that same thing in the middle of March when we were in the thick of the tailspin of the coronavirus reaction. It was a prudent move to lighten up on some of those riskier asset classes at the end of last year, and it was a prudent move to then buy the defensive assets that had suddenly outperformed because of the downside action and all that volatility we just talked about. So things like bonds appreciated more than equities, or depreciated less than equities. So we did another rebalance. And that was basically under the spectrum of risk management. We also made some investment strategy change moves, some underlying investment swap outs, trying to upgrade quality and the earnings potential for some of our underlying investment strategies. Beyond that, just beyond the investment framework, though, in terms of operations, the biggest thing we did as we were early in the the coronavirus unfolding. This is way before any of the stay-at-home mandates and social distancing. This was back in February, and very early March. I had just been out to visit you all down in the Gulf Coast, we were still going full bore on Mardi Gras and everything. There was no cancellations of everything. So it was very early in those stages, but we were already getting ready to do some communications because the markets were starting to pick up in volatility, that we were starting to see some of the reaction in the geographies that were getting hit a lot harder overseas, primarily, of course, China and Europe, and Italy and Spain specifically. And it seemed that those risks were, were becoming greater and weren't going to be contained to just those regions. So as part of that, we started to plan some additional communications and increase our presence. And we did that in the last several weeks. Since the beginning of March, we started, some white papers, some communications to clients, and plan participants through our business lines, trying to steel them for what we thought was going to be more volatile times, and start to project some of the risk management moves that we were intending to make and then made. So one of the biggest things was just presence in communications in the very beginning stages of the volatility pickup, and what was at that time looking like it was going to be a bad event, not nearly as bad as it ended up being, but we certainly started that early. So in terms of kind of crisis management and risk management, there were some specific things in investments we did, and some specific things in terms of just being present in being transparent and communicative in our outreach to our advisors, our clients, and our participants.
Couple of quick questions, Chris. Just quick answers, if you don't mind. If I'm in my 30s or 40s with a projected retirement time horizon of potentially 25 or 30 years, a couple of things you might be saying to me as a young professional or young business owner as it relates to my dollars and where do I enter back in if I never got out? Do I reposition some assets? Do I sit down with an advisor like a Josh with a firm like yours and kind of go through a plan and establish some goals? What are your thoughts there?
Yeah, great question, and some good points to make here, because number one, if you came into this situation with a plan, good for you, and don't deviate from it, because part of the role of the advisor and the people supporting them, like myself and our investment team and our investment committee, is in establishing those plans, we're forecasting long-term investment return and risk as part of the construction of that investment plan and the investment management intentions, the allocations we use for an individual specific timeline and risk tolerance, willingness, and ability to take on risk. And those are using 20, 30-year projections that assume that we're going to have a bear market every decade or two, and that we are going to have a recession every decade or two. So although we mentioned history doesn't necessarily repeat itself, but it often rhymes. We need to, as long-term investors, be ready for a turbulent market. Certainly pullbacks are kind of routine. These kind of events aren't so routine, but they still do happen once or twice a decade, and they should be baked into their investment plan. Now, if you didn't have an investment plan coming into this, the worst thing to do is to sell out, and now you're stuck missing the rebound. But if you did, it's a good time to start thinking about, how do I re-enter the market and get back on plan and course correct? And there's going to be some pullbacks when you're up, on days like today where you're up 2 to 3%. Probably wait till we have another day where we're down 2 or 3%, and start putting your money back to work. If you're comfortable and your time horizon is like you're saying, 15, 20 years, then you probably don't even need to worry about that. You can just do a lump sum and get back in and let time work for you and diversification work for you.
Yeah, very well said. Well, Jay, I don't know if you have anything else. Chris, you came in and done exactly what we were looking for. We really wanted to provide people a glimpse into the decision-making processes that would be going on at a large independent RIA/investment company / collection of advisors during this time, because I think what the public has seen a lot of is just a lot of the end product of these conversations, or on the other side of it, what they've seen is maybe a lot of reactionary posturing. I think it's very important that, especially for clients of mine and clients of Prime Capital Investment Advisors and Qualified Plan Advisors, I think letting them know that there is quite a bit of thought and prudence and experience behind some of the captains of the ship, if you will, if that's the best way to put it. You all are guiding this thing through a storm, and I thought it was important to provide people some insight into how you're doing so. So I want to thank you for coming on. And please feel free if you have any last words before I wrap up the show.
My pleasure to join you, and I think you stated it quite well that myself, my colleague on the qualified plan side, Matthew Eichmann, we were doing these webinars and we wanted to get out early, be proactive on this communication and make a presence. That's the same kind of leadership strategy you're seeing, by the medical experts, and of course our politicians are trying to get out there and be transparent and frequently communicate as much as we can, and as straightforward as we can to get through this event. It was a team effort, as you mentioned, and you kind of see the end product, but there's a whole lot of work going on, behind the scenes to make all that happen, especially in this kind of format where we're doing things kind of separate locations and geographies and different home environments. But it's been a pleasure to help out and work through this with you all.
I'm just surprised that none of my kids came running behind me during this video or interrupting us on this audio. Chris, thank you so much for joining us on Every Dollar Counts. Hopefully I know we will all get through this, and certainly some opportunistic times moving forward, but we all need to be cautious of what's going on. And like you said earlier, it needs to adhere to whatever your own personal plans are for yourself, for your family, for your business.
Wonderful. Very well said, Jay. All right. So listeners, if you would like to follow up on this conversation, you can reach out to us via text or voicemail at 251-327-2124. Plus, you can always visit gulfcoastfa.com. That's Gulf Coast FA, FA's and financialadvisor.com. Or you can visit pciawealth.com. You'll find Chris Bouffard's profile there. On those websites, you can hear this podcast and all our other podcasts. And then lastly, to any of you independent or semi-independent advisors and agents out there, Jay, I'm going to modify this sentence a little bit. If you're feeling really alone, I haven't felt very alone during this whole thing. And part of that is the fact that I've got Jay Stubbs here on speed dial helping me out with things like this. And another part of that is, quite honestly, is the leadership of Prime Capital Investment Advisors. I would put up a second to none as far as being communicative and also being out in front of all this. As I've told Jay multiple times, I feel like other than my office being in downtown Fairhope and looking like a ghost town, I feel like I'm as connected to my leadership and my clients and my friends as I've ever been. So anyway, showing the can. This is the first time we've done it this way. I think we got through the hiccups. Johnny will clean it up a little bit for us. I want to thank again Chris Bouffard of Prime Capital Investment Advisors / Qualified Plan Advisors. He is the Managing Director for the Wealth Management Division. Also, thanks to Jay Stubbs, my co-host. Thanks to Johnny Gwynn, Deep Fry Studios, for not pulling all his hair out and getting this thing figured out how to record this way for us. And then lastly, a huge shout out to all of you out there that have joined Jay and I on this journey. Didn't see this curve in the road coming, but here we are. And for those of you all stuck with us through these leadership and trying to stay on top of these things during crisis. Thank you for joining us. We're going to keep coming out with this kind of content. This has been Every Dollar Counts with Josh and Jay. Thank you all. Have a great day.